Yo, what's good, boys? So this is how to actually trade prop firms. This is a no BS guide, and I'll get straight into it. So prop firms obviously don't want you to know this because you're leveraging and you're taking advantage of it, right? You're taking advantage of these rules or these, this game. It's basically a game, right? When you're trading prop firms, you're trading against a casino. Whenever you lose money, they make money. Whenever you make money, they lose money. It's basically like a casino, right? So make sure to watch until the end because this could save you and make you a lot of fucking money when you're trading this. And this is a no BS guide. I haven't seen any YouTube videos on this whatsoever, and I thought, why not just make it, But there's obviously a few stages to this, so I'll be going over everything, right? Stage 1 is to pass phase 1, pass phase 2, get refundable fee, get a payout, rinse and repeat, and get max allocation, right? I'll be going over all of these as I said, but let's get into it. So let's just use round numbers here. Let's say an average, let's say a $100,000 challenge is about what's the price range nowadays? I've seen $298, I've seen 350, I've seen 400. Let's just use 350 as an average, right? $300 average. And if you spend 350, you get access to a 100k challenge, right? And the profit target, phase 1 profit target is typically 8%. So I've seen, wait, I can't spell 8%. So I've seen 9%, I've seen 7%, and let's just, I guess we just meet at like the standard is 8%, right? Let's just use the standard as well. So pass phase 1 profit target is 8%. Pass phase 2 profit target is 4%. That's also the average of this standard or this industry, right? And meaning that there's two ways you can pass this, okay? Keep watching here. Two ways to pass it. Well, you can pass it aggressively, the aggressive way, or you can pass it the passive way, right? If you've got the capital to spend some more on prop firms, prop challenges, and you don't really care about blowing them, well, I would suggest to do it the aggressive way, because the faster you get funded, the faster you get a payout. The faster you get a payout, the faster you make money. The faster you make money, the faster you get a return on investment. Remember, this is all a game of ROI, right? It's an ROI game. It's basically that's what trading prop firms is. Prop capital isn't sustainable. It isn't long term, but you just have to get a bigger return than your investment. Funny enough, right? And ideally at least a 5x. Typically, the way I teach others, it's like 10x minimum, but at least a 5x return of investment. But that's beside the point. But just remember this whenever you're trading prop firms. It's okay to blow one account, it's okay to blow multiple accounts, but as long as your return is higher than your investment, right? But let's get into the two ways of passing. So there's the aggressive way and then there's the passive way. Let's go over the aggressive way. So the aggressive way to pass an account is risking max daily drawdown per trade, which is typically 4%. I've seen 5%, but let's just round it down to your benefit. And remember, these numbers, I'm not just pulling them out of my ass, funny enough. Like, these are real numbers. The average price is 350. The average profit target is 8 and 4. And, I've seen, max daily drawdown be 5%, but just to your benefit, to make it a bit harder to pass, quote unquote harder, right? Let's just use 4%, right? So 4% is the max daily drawdown per trade, or max daily drawdown you can risk. So risk 4% per trade, right? Meaning to pass phase 1, you need 2 Rs, right? Because 2 times 4%, that's 8%. In order to pass phase 2, you need 1 R, right? Pretty self-explanatory, right? So your job is obviously to get funded. As I said, you can either do it the aggressive way if you got the capital to do that, if you got the capital to spend a few $1,000s on challenges, on evaluations, well, do it the aggressive way, because the faster you pass it, the faster you make money, right? Funny enough. But your job is to get funded. This can easily be done in literally one trade and one trade. But let's just use round numbers here, and let's use a pretty bad win rate. Let's say you have a 60% win rate with an average risk to reward of a 1. Just an average RR of 1. Let's write this down as well. Where can we write this down? Let's up here. 60% 1-to-1 RR on average. That is you. That isn't that good, but it isn't bad either. Like, it's profitable, obviously. But let's just use these numbers for now, because 1-to-1 is easily to calculate, right? It's easier to calculate. So in order to pass phase 1, you need to win 2 trades. That is it. In order to pass phase 2, you need to win 1 trade. You can do this within a week, basically, or within 2 weeks, right? So you pass it aggressively, and let's also go over the passive way to pass it, actually. Pass Passively, well, just divide these numbers by 2. By risking max daily drawdown, by just risk 2% instead per trade. I wouldn't suggest risking less than that, to be honest. If you got a really low win rate, maybe risk like, why isn't this loading right there? If you got a really low win rate, maybe risk 0.75% or 1% per trade. But if you ideally got more than a 50% win rate, you can easily risk 2% per trade, right? Remember, it's okay to blow an account as long as your return is higher than your investment. So risking 2% in the passive way, and in order to pass phase 1, you need 4 hours, right? By just multiplied by 2 and just multiplied by 2, right? 4 and 2 hours, right? And remember, so this is how to pass it, right? The aggressive way, the passive way. I would suggest the aggressive way, as I said, if you got the capital. If not, do the passive way. But once you're funded, right? Okay, wait, let's actually do these numbers as well. So your average pass rate should be ideally 33% on the aggressive, with the aggressive mindset, right? And obviously just divide, or I mean just multiply it by 2, so 66% ideally should be higher, but let's just round it down to your advantage as well. Pass rate passively to pass phase 1 and 2 is about 66% and aggressively 33%, meaning that on average you spend 3 times $350 equals $1,050. You spend $1,050 on average to get funded, right? And over here it's like just quick math. I think it's like $700 on average, because it's 2 times $350 because the average pass rate is 66%. So $700 and $1,050, right? But it's an ROI game. Remember that. If you make more than $1,050, you've got a positive ROI, meaning you're making money off this, right? So once you're funded, either you pass it aggressively or passively. Well, just please, this is very important. Please just place a micro lot and wait for the refundable fee, okay? Don't get greedy. Don't start risking 2% per trade. Don't start just going straight ham. Don't do that. Just be patient, place a micro lot, and wait for the refundable fee, right? Because once you've got the refundable fee, you've got your $350 back, right? It's house money now. It is house money you're playing with. The risk is off the table, right? So wait for the refundable fee, wait a few weeks whenever the payout is due, right? And just wait for it, okay? But now you're funded. Let's write this as well. You're funded. Congrats, bro. You're already better than 99.95% of trader. I think it's like that, or 99.5% of trader, something like that. The statistics of passing is absolutely crazy, right? It's so dumb. Prop firms lure you into buy all these challenges and they're selling you a dream basically when you think you can trade with a 100k challenge, but you just buy one when you're trading for like a week or something and you just blow that shit. And then it's an endless loop like this. You buy more challenges, you blow it, buy more, blow it. Like it traps the basic, it traps the new traders, right? But whatever, you're funded now. And remember, now you can risk however much you want basically, but I would suggest to risk 2% per trade. Risk 2% per trade. That equals to $2,000. Funny enough, $2,000 per trade. And let's say that these are numbers, right? 60% win rate, 1-to-1 RR. Let's use a risk of ruin. If you don't know what it is, this is just, search it up. Risk of ruin. You can see it right here. Risk of ruin, and go to my FX book, right? That is what I'm using right here. So win rate is 60%, average win is $2,000, average loss is $2,000 because you're risking 2%, average 1-to-1 RR, average risk per trade 2%, maximum total drawdown is 10%. Number of trade doesn't matter, let's just say 10. I mean, the number doesn't change. Calculate this. Risk of ruin, meaning risk of blowing your account, is 13%, okay? So let's write this down as well. Risk of ruin equals 13.7%. Wasn't it 13.7? No, 13.1, my bad. 13.1, let's just say 13% then. 13%, meaning what is 13x equals 100? That's like what? 7.6. You can see this, right? 7.6. Let's just round it down to 7. So ideally, you should be able to win 7 trades before you blow the account, right? And when you win 7 trades, well, that's $2,000 times 7 equals $14,000 in total profits. And remember this as well. Whenever you're making money on the funded account, as soon as you can, as soon as you're eligible for the payout, every like weekly or bi-weekly or monthly, just pay yourself out, okay? Pay yourself out. Don't get greedy. Don't wait until you've got like at least 5 figures to pay out. Just pay out whenever you can, because you're taking advantage of this and you're leveraging this. Just remember that. Pay yourself out whenever you can, okay? But ideally, off statistics, you should be able to, or I mean, there is a 13% chance that you will blow the account, meaning you should, on average, statistically, win 7 trades before blowing the account, meaning you've just made $14,000, right? Your expenses was $1,000. Remember that. And this is $1,000 before you even, like, this is like to account for the refundable fee. We don't even, account for this. So the ROI is even bigger than this. But let's just say $1,000 and your return is 14,000. That means your ROI is 14x. Okay, wait. It is theoretically it is like 13.5x. So for all the people in the comments saying that it's 13.5x, not 14, but it's 13.5x ROI. Remember that. So it's okay to do it aggressively and blow 2, 3, 4 accounts before you get funded, because I mean your ROI is 14, almost 14, right? Let's just say 13 now, 13.0 ROI, meaning you can blow 13, or I mean blow 12 accounts and just get funded once and do this technique, and you've already made all the money back. Like the risk to reward is 14 times, or 13, like 13.5. Like it's absolutely crazy. This is a ROI game, right? Remember that. It isn't long term, it isn't sustainable, but this is how you leverage and take advantage of prop firms, right? I don't mind I don't care if you use, pass it aggressively or pass it passively, as long as you remember that it's an ROI game, right? Your return has to be bigger than your investment. That is basically how you leverage these prop firms. And remember, if you want to have a max allocation, rinse and repeat phase, well, it's basic. This was a $100,000 account. Well, if you want max allocation, just multiply all these numbers, not this number, but multiply all these spendings by 4, because the average max allocation, max allocation is about 400,000, right? 3 to 400k, 3 or 400k on average, right? So just multiply these by 3 or 4. Let's say this number right here multiplied by 3, that's $3,150, and your payout is obviously 14,000 times 3. That's 42,000. So I mean, just do that. It's basically a money printer. If you can do it on a $100,000 account, you can do it on a $400,000 account or a $300,000 account. Wait, what am I saying? $300,000 account, right? It's the same thing. Just use a trade copy and do it over and over again. But remember, it's okay to blow an account, right? As long as it's a positive ROI and as long as the ROI is at least 5x, right? But that's basically it, boys. That's how you leverage and take advantage of, prop firms. This is what they don't want you to know. So if you liked the video, if you found it helpful, informational, or what's that called? Informational full. Is that even a word? I don't know. But if you like the video, leave a like, comment, and subscribe. And yeah, thank you for watching, boys. I'll see you guys in the next video.